Welcome back, folks. In this short video, I want to take a quick look at the overall market, just taking a look at a few key pairs. I'm not going to be trading any of these pairs. I'm only trading gold, but I thought it would be wise to just have an analysis of the market in a broader sense. Now, nothing in this video should be construed as investment or financial advice. Okay, pause the video, go back and rewind and look at the risk disclaimer that I've posted at the start of this video, because most traders lose. Okay, this channel is all about education, and I'm teaching you ICT concepts and how to read the charts in terms of price and ICT concepts. Okay, we're going to be taking a look at focusing on high time frames. So looking at daily charts, we're going to be starting off with the dollar index. Now I see the dollar index repricing higher to seek buy side. Okay, the market, in my opinion, only moves for two reasons. One is to seek an inefficiency to revisit and balance the market, and two, to seek liquidity. So there's going to be a whole bunch of people, traders, who are short, and those folks will have stops above that high there. And I believe that the dollar index is going to be seeking that liquidity. Now, my expectation is that the dollar index would need to reprice lower somewhere before repricing high to its objective. Okay, that's my opinion. Obviously, I can be wrong, but that's what I see on this chart. Now, anything paired to the US dollar, such as the euro, is going to move in the opposite direction. So if the dollar index is going to be repricing higher, then I would expect that the euro is going to be repricing lower. Now, remember, this is not a trade recommendation. Monitor the market to learn how price behaves. Now, my expectation would be, as Michael teaches us, we have some relative equal lows here that the market is going to be reaching for, because anyone that is long the market is going to have their stops under that swing low. Now, just as I said on the dollar index analysis, we're going to expect repricing, a pullback prior to repricing lower. That's my expectation. And this area here really sticks out on the chart for the euro. Okay, let's now look at the pound. Now, I think this area here really sticks out on the pound. And this wick, I think, also sticks out for where this market might be pulling back into prior to continuing its movement down. I expect the pound to seek stops resting below that swing low, where there would be folks who are already long the market. Okay, now the only market that I'm trading at this point in time is gold. Okay, that's predominantly what I trade. Sometimes I also trade the Nasdaq, but my focus is really gold, and I'm expecting gold to also continuing to reprice lower. And this level is kind of the obvious swing low that's sticking out that I expect the market to reach for in terms of liquidity. Now, I could be completely wrong in my analysis. Okay, this is just my opinion, so this is not a trade recommendation, but monitor the market to learn how price moves. So I would expect that gold is going to make a pullback, maybe somewhere into these two up candles, okay, or somewhere inside of this wick, right, prior to moving and repricing lower. Now, gold could simply continue to move lower without any pullback. That's also a possibility, okay, on this daily chart, in which case I would look for a lower time frame entry for that continuation lower. At a minimum, I'd want to see the market pull back up into some kind of a 4-hourly bearish fair value gap, or a bearish order block, or a bearish breaker on a 4-hourly time frame for an entry for me, okay, on the right day at the right time for continuation lower. And if I don't get that pullback, whether it's on the daily time frame, okay, or on a 4-hourly time frame, then I'm not really interested in entering into this market, right? So for example, if we just continue, even on the smaller time frames, to go down, highly unlikely that the market goes down without any pullback. But if that is the case and we do get down here, well then that's fine. I've just missed that move and I'm okay with that, okay? And as I said, I can be completely wrong. I could be completely wrong on my analysis, and we could simply just start moving up from here, right? My expectation is that the dollar index will be repricing higher to seek liquidity, resting above that swing high, in which case I'm expecting all other markets like commodities and currencies and indices to reprice lower. Okay, so your job now is to study the charts, monitor the charts, look at this every day, have a look at how the market, how price is moving, and how price behaves at key levels to understand where those pullbacks are coming into, at what point and what day, what time is the market reversing. If it's reversing, is it reaching for liquidity? Is it reaching for an imbalance? Okay, that's how you're going to learn, by monitoring price in real time if you can. If you can't monitor it in real time, then look at it at the end of each day. But you've got to be monitoring price. Investigate how price on the dollar index, right, impacts movement in the euro, movement on the pound, and movement in the commodities and indices like gold or the Nasdaq. So remember, none of what I've said here is a trade recommendation. This channel is all about education. We're learning about ICT concepts and how price moves from one ICT signature to another. And we're learning about price action on this channel. Monitor the charts, study the charts in real time if you can, and learn how price moves from one level to the other. I look forward to talking with you in a future video.